Hello, everyone, and welcome to the Money Flow Weekly Market Newsletter. I'm your host, Dr. BJ Love, and I'll be bringing you this week's update. Here at Money Flow, we use time-tested methods and indicators that helps us to be on the right side of the market. Now, as we usually say, long-term trends dominate, short-term trends fluctuate. And we're going to see how that plays into this week's stock market review and forecast for Friday, April 17, 2026. Now, global markets surged this week, last week rather, as geopolitical tensions finally began to thaw. The major U.S. averages advanced for the third consecutive week, fueled by the announcement of a ceasefire between Israel and Lebanon. Investor sentiment shifted rapidly from war-driven sell-off to recovery mode. The S&P 500 propelled to close above a 7,000 mark for the first time in history. Meanwhile, the Nasdaq notched its first new high since last November as the market pivoted back toward high growth AI infrastructure and a massive reboot in software. Now, the weekly market scoreboard, we're going to see the closing prices here for April 17, 2026. The S&P closed at 7,126. The Dow Jones Industrial closed at 44,126. The NASDAQ Composite closed at 19,850, while the Russell 3000, the small cap, closed at 3,982. The VIX, aka the fear gauge, closed at 17.48. And as we reiterate each time we distribute this broadcast, that as long as the VIX stays below that threshold of 20, the market tends to grind higher. And that is what we have been noticing here over the past few weeks. Now, oil is closed at $81.95 per barrel. Gold closed at 4,831 cents. I'm sorry, 4,831 and 61 cents an ounce, while silver closed at $80.82 an ounce, and Bitcoin closed at 77,373. Now, moving on to the sector spotlight, what's in the strongest sectors as of Friday. We had capital money flowing out of the defensive energy plays into the high beta growth sectors like IT and so forth. The following sectors show the strongest leadership, and that leadership is in information technology, the undisputed leader, driven by a 7.69% weekly gain, and also is consumer discretionaries, jumping 6.66%. The sector benefited from the peace dividend and a sudden drop in energy costs, boosting expectations for consumer spending. We also have the communications sector, closely followed the tech lead. This sector rose almost 6% as Meta platforms and digital ad spending outlooks improve along the macro stability. And precious metals commodity strength. While not an equity sector, silver showed the highest relative strength across all assets classes this week, surging up 7% as it decoupled from the falling energy complex. Now, the bottom line is that with oil prices tumbling briefly below $82 a barrel and the VIX retreating to more normalized levels below that threshold of 20, as we mentioned, the path of least resistance for equities appears to be higher. Now, here we use the old cliche, volatility creates opportunity, but only for those who are prepared. So that is what our job here at Money Flow is to you is to prepare you for that volatility and then how you can profit from it. Now, this is not investment advice. This is prepared for client distribution and for educational and informational purposes only. Now, let's move into the charts. Now, as you can see, if you've been with us for a while, we have our uh, uh, foregrid, which we show the major indices that we follow. Uh, we got the S&P 500, we have the Dow Jones Industrial Average, we have the NASDAQ Composite, and the Russell 2000 Small Cap. So what we're going to do is go ahead and maximize these charts, and we're going to look at them individually. And as you notice, we're still in that green background. We had 1, 2, 3, 4, a 5-week dip that came briefly below what we call our line in the sand, but it did not remain there. It sharply reversed, and for the past 4 weeks, we have been seeing uh, weekly positive upticks, even into a new all-time high for the S&P 500. As you can see as well, our confirming indicator, the MACD, has turned positive, letting us know that we are still in a long-term uptrend bull markets. And as we always state, long-term trends dominate, short-term trends fluctuate. So we had a short-term trend for about 4 weeks, and now that long-term trend has established itself visually on the chart. The background never turned red, showing that we were in a bear market configuration. We have still remained in a long-term uptrend bull configuration on the S&P 500. Now about the same for the Dow Jones Industrial Average. We came down for about 5 weeks or so, and for the past 4 weeks, we have been in a reversal almost to where we fell from that new high from that on week of 2-9. Okay, moving on to the NASDAQ Composite, same type of situation. We also see confirmation in our MACD that this reversal is not topped out, actually just getting started, and we still remain in that green background that we have been in for almost a year now, dating back to May of 2025. So, and with the Russell 2000 hitting an all-time high, also we see that our confirming indicator, the MACD, has turned positive, letting us know that we still could have a high probability of having more upside to go in this bull run. So there you have it. All 4 of the indices are green, and giving us signal that we are still in a bull market, even though we had a short-term down turn briefly for about 3-4 weeks, and now we have returned basically back to where we fell from. So with that, we're going to look at those sectors that are showing strength. And as we mentioned, we're going to be looking at going to our sector strength chart. Spider sector strength. Yeah, we're going to be looking at, we looked at the, we were looking at the information technology, which would be the XLK, consumer discretionaries, communication services, and precious metals. So we're going to start off looking at information technology. As you can see right here, this is a live look, and we're going to switch charts here so we can see this on a in a different view, and that's going to be right here. And that's the XLK on a daily, and then we see it here also on a weekly. And what we like to use as a proxy here, when your daily and your weekly are moving in the same direction, that is a strong indication that this trajectory, current trajectory or uptrend will remain intact. And we also have our relative strength indicator that is really, really positive and strong. We're going to look at the precious metals. Here is a shot of the XME, which includes all of the metals, precious and industrial. And we see our daily chart and our weekly chart are showing incongruence, showing that there is a strong possibility, high probability of this uptrend remaining intact. Also, our relative strength line is well above, showing that there is strong relative strength with the XME. We also looked at the XLY, I believe it was, the consumer discretionaries and the consumer communications. We'll go back and we look at the consumer discretionaries, which is the XLY. And we're having a little bit of a buffering going on here. There we go. Now we see the XLY really breaking above what we call that 30-week moving averages. However, it's not showing the relative strength that I'd like to see, but is moving in a positive direction. The weekly and the daily are moving in a positive direction. And so that was one of the leading sectors for the week. And then also communications, which we see as the XLC. Here is your daily, and here is your weekly, breaking through and not showing the relative strength that I'd like to see. However, it is rising. So there are your strongest sectors for the week. And what I like to do is to show a stock from each sector. So for the XME, we're going to look at the symbol CRML. Okay, this is a stock here that is starting to break out on the weekly and on the daily on huge volume last week. This is a one of those rare earth minerals. We'll look and see as we can analyze it here, and we see it is a Critical Metals Corporation, and it is showing some signs of breakout. We're keeping him on the radar. We'll wait, watch, and see. Okay, now we're going to go into one of these stocks that is on the discretionary, XLY, and that is our old friend, Mr. Ford. And as you can see, he has a very tight consolidation going on here, and it's starting to slowly move up or break out. We'll watch him on the weekly. He's starting to show promise here, and his relative strength is rising. Okay, so that is one that we're looking at in the XLY or the consumer discretionary space. And then on the XLC, of course, we have our old friend Nokia, which has been doing very, very well for us. Very strong stock here on the weekly, and very strong stock here on the daily, showing its prowess, showing its dominance in that particular space. And last but not least, we have a HPE, which is showing very strong trend here on the daily, very strong trend here on the weekly, and those are the ones we like in those strongest sectors. So now there you have it for the week. What is our takeaway? That we are still in a strong uptrend, bullish uptrend, and we're going to continue to wait, watch, and see what stocks emerge as the winners from the coming week. So that's it for now. So as we usually sign off with, every day and every way we get better and better. Every day and every way we grow more prosperous, successful, and victorious. And God's love continues to surround us, enfold us, and enwraps us. And we go forth in perfect peace and ever increasing prosperity. God bless. All the best.